EPK Capital presents Deep Dive on Thermo Fisher Scientific. Hey there, future millionaires and science enthusiasts. Welcome back to EPK Capital. Here we dissect stocks with the precision of a molecular biologist and occasionally make a bad pun. I am your host, Rutvik, and today we're putting a giant under the microscope. Thermo Fisher Scientific, NYSE TMO. Ever wonder what powers breakthroughs in medicine, food safety, and even space exploration? Chances are, TMO is in the lab coat, stirring the beaker. But is their stock a discovery worth celebrating, or is it just a solution looking for a problem? Let's find out. First things first, who are these folks? Thermo Fisher Scientific isn't just one guy named Thermo and another named Fisher having a brilliant idea over coffee. It's a colossal global leader in serving science. They provide everything from analytical instruments and lab equipment to reagents, consumables, and software services. Think of them as the unsung heroes behind the scenes, equipping researchers, clinicians, and industrial labs worldwide. The company was formed in 2006 from the merger of Thermo Electron and Fisher Scientific. As for promoters in the Indian sense, Thermo Fisher is a publicly traded company with institutional and retail investors, rather than a single promoter group. Its leadership is guided by its board of directors and executive team, currently helmed by Chairman, President, and CEO Mark N. Casper, who's been a driving force in its strategic growth for years. Revenue and profit growth over 10 years. All right, let's get down to the numbers. Because while science is cool, money makes the world go round, or at least funds the next big experiment. We're diving into a 10-year financial analysis, and trust me, it's more exciting than watching paint dry, unless that paint is genetically engineered to glow. Looking back, Thermo Fisher has been a consistent growth machine. For instance, their revenue has seen a phenomenal climb. If we project to October 2025, based on analyst consensus and historical performance, we're looking at revenue potentially exceeding $45 billion for the fiscal year 2024, with projections for 2025 hinting at further growth towards $48 to $50 billion. That's a significant leap from around $17 billion a decade ago. This isn't just inflation, folks. It's smart acquisitions and organic growth in a booming scientific sector. Now let's talk profit growth. Their net income has largely followed suit, albeit with some fluctuations due to acquisitions and R&D investments. We've seen net income figures that could comfortably hit over $7.5 to $8 billion for fiscal year 2024, with 2025 projections showing continued strength. This demonstrates their ability to not just grow sales, but also translate those sales into actual earnings. This is where we peek under the hood. For a company that grows significantly through strategic acquisitions, some debt is expected. As of their most recent reports, and projecting to October 2025, assuming typical financial movements, TMO typically manages a healthy debt-to-equity ratio. While absolute debt figures can be substantial due to large M&A activities, their strong cash flow and profitability generally allow them to service this debt effectively. We're talking long-term debt that might hover around $30, $35 billion. But crucially, their interest coverage ratio is strong, indicating they can easily pay their interest expenses. It's like having a big mortgage, but also having a steady, high-paying job. Thermo Fisher consistently boasts healthy gross profit margins, often in the mid-40% range, reflecting the value and specialized nature of their products. Operating margins tend to be in the high teens to low 20s. These are robust numbers for an industrial-scale operation, showing good control over costs and strong pricing power for their innovative solutions. All right, let's switch gears from the spreadsheet to the squiggly lines. It's time for some stock chart technical analysis. Looking at the long-term chart, TMO has been a phenomenal performer, a true growth at a reasonable price story for many years. It's largely been an uptrending beast. We can see key support levels have often formed around previous resistance breakouts. Historically, strong support might be found around the $480–520 range, which has acted as a bounce-back zone after significant pullbacks. On the flip side, resistance tends to be dynamic, but we've seen it pause around $620, $650 before, and breaking new all-time highs would mean navigating uncharted territory above those levels. Now for our friend, the RSI, Relative Strength Index. This momentum indicator tells us if the stock is looking overbought or oversold. When TMO has pulled back, the RSI has often dipped into the 30-40 range, signaling potential entry points for value investors. When it's been on a tear, the RSI can venture into the 70s, suggesting it might be due for a breather. As of October 2025, depending on recent market movements, if the stock has run up, we might see the RSI in the mid-60s, indicating strong momentum, but not necessarily extreme overbought conditions. Conversely, a recent market correction could see it closer to the 50s, suggesting neutrality. Benjamin Graham's approach. Now for the moment of truth for all you true value investors out there, or as I like to call us, the Benjamin Graham Fan Club. Is Thermo Fisher Scientific currently undervalued, fairly valued, or overvalued based on the wise words of the father of value investing? Benjamin Graham's approach, while simplified for our YouTube purposes, often involves looking at factors like earnings per share, EPS, growth rates, and a margin of safety. Let's assume, for the sake of projection to October 2025, and based on analyst consensus, TMO's forward EPS for FY 2025 might be in the ballpark of 24-26. And given their robust market position and acquisition strategy, a conservative growth rate, G, of say 10-12% per year for the next 7 years isn't unreasonable for a company of its caliber, though some might argue higher or lower, if we plug in. Now, here's the kicker. As of October 2025, if TMO is trading anywhere in the $580-$620 range, which is a reasonable assumption based on recent performance and projected growth, then based on this simplified Graham model, the stock might appear undervalued or at least fairly valued with a decent margin of safety. However, a critical caveat: TMO is a high-quality, high-growth company, and true deep value opportunities are rare. Many modern value investors adjust Graham's formula for companies with strong competitive advantages, moats, and consistent growth. So, while this basic formula suggests undervaluation, it's always compared to the market's current premium for quality and growth. It's not a screaming bargain in the traditional Graham sense, but it offers a solid intrinsic value. This suggests that for a company of its quality, the current price offers a reasonable entry point, especially if one believes in sustained double-digit growth. Pros versus cons. TMO is deeply embedded in the global scientific infrastructure. From pharmaceutical R&D to clinical diagnostics and environmental analysis, their products are essential. This creates a strong moat and recurring revenue streams. The company consistently invests in R&D and has a stellar track record of strategic acquisitions that expand its market reach and technological capabilities. They are masters at integrating new companies and extracting synergies. The broader life sciences and healthcare sectors are experiencing long-term growth, driven by an aging global population, increased healthcare spending, personalized medicine, and biopharmaceutical innovation. TMO is perfectly positioned to benefit. As we saw, consistent revenue and profit growth, healthy margins, and robust cash flow allow for continued investment, debt reduction, and potential shareholder returns. While our simplified Graham model suggested fair value, TMO often trades at a premium compared to the broader market, reflecting its quality and growth. If growth slows or interest rates rise significantly, this premium could compress. While M&A has been a strength, continued growth relies partly on successful integrations. A misstep in a major acquisition could impact financials. While somewhat defensive, severe economic downturns could lead to reduced R&D spending by customers, impacting sales, particularly in academic or smaller biotech sectors. The scientific instruments and services market is competitive, with other strong players like Danaher, Agilent, and various specialized firms. While TMO is a leader, they aren't without rivals. Global supply chain disruptions can impact the availability of components or raw materials, potentially affecting production and delivery of instruments and consumables. Verdict, conclusion. So, what's the verdict on Thermo Fisher Scientific? Is it a buy, a sell, or a hold and ponder? Well, you know the drill. I can't give you direct financial advice. That's what financial advisors are for. But here's a balanced summary. Thermo Fisher Scientific is a high-quality, fundamentally strong company with a proven track record of consistent growth, robust financials, and an indispensable position in the ever-expanding global scientific landscape. Their ability to innovate and acquire strategically has propelled them to the forefront of an essential industry. From a valuation perspective, while never a dirt-cheap stock, a Benjamin Graham-inspired analysis suggests it's likely fairly valued to potentially undervalued when considering its growth prospects and intrinsic quality. The bull case is strong, driven by secular tailwinds in healthcare and life sciences and their ability to execute. The bear case mostly revolves around potential valuation compression in a different market environment or M&A execution risks, which for TMO, historically, have been well managed. Ultimately, TMO appears to be a rock-solid performer, a foundational holding for many institutional investors, and a company well-positioned for continued success. It's the kind of stock that lets scientists discover new cures, and investors discover new returns. And that, my friends, is our deep dive into Thermo Fisher Scientific. What do you think? Are you bullish or bearish on TMO? Let me know in the comments below. Don't forget to like this video, subscribe for more stock dissections, and hit that notification bell so you don't miss our next episode. As always, this video is for informational and entertainment purposes only and should not be considered financial advice. Investing in stocks involves risks, and you could lose money. Please consult with a qualified financial advisor before making any investment decisions. Do your own research and invest wisely.